Hi everybody, it's FIBO Group and you are watching to the Market Watch review. Despite the dramatic rise in U.S. stocks and the decline in the dollar, U.S. rates were not significantly affected. This was the starting point for today's action ahead of U.S. employment data. Asia-Pacific equity shares moved higher, and Europe's Stoxx 600 edged up to extend yesterday's rise. After yesterday's drop, the greenback has stabilized. Today's weakest currencies are the Antipodeans and the Norwegian Krone, off 0.2% to 0.5. The Canadian dollar and the euro are almost flat. Initial gold rallies extended to $1,874, but have since fallen back. The $1,855 to $1,860 region is where support can be seen. July WTI was reverted from the $117.70 region. Asian Pacific market. Japan's composite PMI and preliminary May service were both revised higher, suggesting that Japan, the third largest country in the world, continues to recover from the COVID restrictions. The US dollar is trading in a narrow range compared to the Japanese yen. The majority of price action today has occurred between JPY 129.75 to 130.00. The preliminary PMI for Australia was also revised higher. The Reserve Bank of Australia will continue to increase its interest rate next week. Yesterday's trading range saw both sides trade on the Australian dollar and closed above its high. The Australian dollar climbed to $0.7285 today before it stalled. Market of Europe. The decision by OPEC Plus to increase output by approximately 50% to 648,000 barrels per day was not well received by oil traders. July WTI prices rose 5.5% from the session low of $111.20 to $117.55. This was just shy of Wednesday's high. The final Eurozone PMI was disappointing. The composite PMI and preliminary German service PMI were both revised lower. Yesterday, the euro rebounded well. It rose nearly 1% yesterday after falling by 1.3 cents Tuesday through Wednesday. It closed above Wednesday's high, and today's follow-through purchases lifted it to nearly 1.0765. Sterling trades in a narrow range of just a third of 1 cent above $1.2560. Market of America. The December Fed funds futures weren't convinced that the ADP private sector jobs report miss was significant. Yesterday's implied yield edged slightly higher. According to the summary of economic projections and official comments, the Federal Reserve believes that the labor market should moderate and can do so without a significant increase in unemployment. The Bank of Canada raised its target rate by 50 basis points for the second consecutive day and committed to increasing it further. On the same day, Baudry, deputy governor, opened the door to raising rates above the neutral 2 to 3% range. He acknowledged that inflation is higher than anticipated. The US dollar saw an outside decline against the Canadian dollar. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.